Hello, everyone. Thank you for joining us for today's presentation. This will be the Affordable Paths to Home Ownership. My name is Terrence Bazil. I'm a community engagement specialist with Harvard University Employees Credit Union, and I'm joined with Ryan Douglas. He is one of our MLOs today who will be helping us and guiding us through this presentation. Thank you for joining us this evening. As we go through today's webinar, I just want to let you know a few housekeeping tips. We will be reducing the background noise. Oops, and we'll be reducing today's background noise, and if you have any questions, please use the Q&A feature. The chat has been disabled, and this presentation will be recorded, so if you miss anything at all, please do not worry. We will be uploading it to our YouTube channel at MyHUECU, and you can rewatch it whenever you want. There will also be a post-workshop survey. Please let us know how we did, how we can improve, and how we can possibly make this presentation more valuable to you in the future. So a little bit about the credit union. We are not for profit for the Harvard community. We are community focused. We are able to, because we're member owned, we exist to serve you. And we do that by having lower rates on our loans and increased rates on our savings accounts. And we are very convenient. We are located all in the Boston area, and you're able to access us through online banking anywhere. And before I kick it off, I'm going to introduce Ryan really quickly. Ryan Douglas, here you are.
Hi, everybody. Thank you so much for joining us. As Terrence just told you, my name is Ryan Douglas. I'm one of the 5 MLOs here at the credit union. I currently work out of the MGH Partners Healthcare and Charlestown Navy Yard branches, but we do have branches all throughout the Boston area. Thank you so much for joining us today. So here's kind of the agenda on what we're going to go through. So we're going to start with readiness, followed by the budget. We're going to go over a little bit of credit, some first-time homebuyer programs, and then we're going to kind of dive in, on the surface there to our Home Ready program, which is great for our first-time homebuyers. Next slide, please, Terrence. So we're going to start with the budget here. So pretty much, the biggest thing to do is kind of get everything in working order here. So, list out what are your financial goals? What are your long-term goals here? Obviously, if you're in this seminar, you have some kind of, target to be a homeowner at some point. So the best thing to do is to kind of, reach out with us. We'll work with you on your budgets, and your specific goals here. If you schedule one of us, we're happy to go through that with you. So just kind of looking at a budget as compared to your income. So the 5-30-20 budget, that's kind of, the benchmark, the best thing that you can do here. So 20% of your paycheck, it's recommended that you're putting that to savings, financial goals, emergency savings, and your retirement accounts. 50% of that's going to be going to your essentials. So that's, that's your needs and, your fixed costs for your home, your travel, medical expenses, utility bills, all those good things that you'll need. And then 30% for your wants, flexible spending, entertainment, going out, dining, clothing, that's just a good mix there to kind of, keep everything in tune to meet your goals. So one of the biggest things to kind of be saving towards here is your emergency fund. So what you kind of want to do is keep this in mind, aside from the home buying journey here, you want to calculate 3 or 6 months of expenses. That way, should anything happen, you're going to be covered. You can start small by meeting this goal, put away $50 a paycheck at an ACH or, direct deposit into an account that you're not seeing, $250, just meet these goals and, kind of help you, meet up to that fund there. So credit. So next we're going to talk about credit. So what is your credit score? So essentially, the credit score is a measure of your consumer credit risk for lenders. So each time you're going to apply for a loan, mortgage, personal loan, any kind of financial product that's going to be lent to you, we're going to run a credit score. So with that, there's going to be 3 major credit bureaus that we're going to review. It's going to be Experian, TransUnion, and Equifax. So in the mortgage, we're going to take the average of the 3. That's going to be your credit score. So if you see here on this little chart here, so excellent credit score, 720 plus, goes all the way up to 850. If you're within that, A plus, good credit. Above average, 650 to 749. Fair, 620 to 680. Poor credit would be 619 and lower. So most common ranges of the scores on those 3 bureaus are 300 to 850. And as I said, they're going to be independently managed by those 3 credit bureaus. So the biggest one that lender's going to use is going to be your FICO score. So with that, here's the breakdown here. So your amounts owed, that's going to be 30% of how that score is calculated. The credit mix, that's going to make up 10%. So what type of credit is on there. Is it personal loans? Is it revolving credit, student loans? It's all going to be weighed into that. The length of credit history will make up for 15%. Your payment history will make up for 35%. So you want to make sure all those those monthly payments are being paid on time, because that is going to be a huge chunk of what's going to be making up this. And then your new credit, that'll make up for 10% of your FICO score. All right, perfect. So let's jump into home buying here and let's talk a little bit about this. So, at the credit union, there's several benefits of doing a mortgage with us. The first one, we offer a personalized service. We really take pride in getting to work with you, getting to know you. We're local, we're there for you. You can meet us in person, online, whatever's easiest for you, over the phone. We're readily available, all 5 of us. There's 5 loan officers. We work nonstop, 7 days a week. We're there for you on the weekends, after hours. Give us a call. We're happy to pick up and assist you with whatever questions you have, whatever you need. We have a range of mortgage products. So, each borrower, they don't fit into one, mortgage product. So we do offer all different types of products. We have fixed rate loans, adjustable loans, some great first time home buyer loans that we can get you into, to fit your needs, best. And then, if you could go back, Terrence, sorry about that. We also offer competitive rates and credits. So discounted rates for our first time home buyers, which everybody loves, of course, you get a lower rate. We have a great product with 3% down for first time home buyers. A conventional mortgage, usually 5%, but we have a product that we can do it at as low as 3% down. And we give you a closing cost credit, which is phenomenal. So we give you a $500 closing cost credit just for being first time home buyer with us here. We have a digital process, in-house loan servicing. So if you ever have a question down the road after you close on the purchase or your refi, or whatever the product is, we'll be the ones handling it. One of the 5 loan officers will be your point of contact. We'll get you in, touch with our servicing department. We'll make sure everything's squared away. And then we also offer portfolio lending capability. So that's key for sometimes some loans, there's some issues there, where we can kind of work with it with our management department for a review. Next slide, please.
Sure.
Thank you, sir. Cool. So just real entry level stuff, affordability market. So currently, as we all know, it's a little bit of a crazy market out there, but the inventory isn't what it once was. There are, starting to see a little more creep into the market, which is great. More homes for sale. Prices are still remaining relatively high, especially in the Metro Boston area. Rates themselves starting to see a little decline, which is great to see, projecting out into the future. Let's hope they go down a little more too. But, all things said, it's just really just remaining positive in these markets. It's a multifaceted transaction. A lot of things go into it, but, as long as you remain positive and kind of on those goals there, which we'll go over in a little bit, you can absolutely make, your dreams a reality. So just to kind of go over, so our first time home buyer program. So eligibility, who's eligible for a first time home buying program at the credit union? It's somebody that has not owned a home in 3 years. So you could have owned a home, sold it 4 years ago. Congratulations, you qualify again as a first time home buyer with us, or you've just never owned a home at all. So, that's if you're a first time looker, for a home to purchase, excellent. If there's 2 borrowers on the loan application and one of them has owned a home or currently owns a home, as long as one of you fits into that mold there, you'll qualify as a first time home buyer. Suggested credit score is 620 or higher. One of the good things with the credit union, which a lot of institutions do not do, is we give everybody the same credit score. Let me back that up. Sorry about that. We give everybody the same interest rate. So as long as your credit score is 620 or higher, you will get the advertised rate that we offer. A lot of other lenders, they do what's called loan level pricing adjustment. So they're going to take a few things into consideration when giving you that rate. So it's going to be your down payment. It's going to be your credit score. It's all things are going to be considered into that. With us, we advertise our rates every day so you can monitor them. You'll know as long as you have a 620 credit score, here's the interest rate you will receive with us. So the guideline that we do have for debt to income ratio is 43%. So that's kind of a hard set. not to exceed that with all things considered. Factored into that would be your monthly debt obligations, not including the home, and then anything from the home. So, got your mortgage payment, your taxes, and your insurance payments. With all those things combined, they need to fit into a 43% of your debt to income. For the first time home buyer program, we can do single family homes, condominiums, townhomes. We can do multifamily homes for first time home buyers. Little more specific, go into those different kind of qualifications. So we just ask if you are interested in that to reach out to us, because depending on how many units the property has, there's going to be some different guidelines there. But if you're interested, we can absolutely do it. Please reach out to us. So first time home buyer program. So as I noted earlier, so we can go as low as 3% down on the financing, as long as that's a conventional mortgage. So the highest loan amount you can do at 3% down is $726,200. And that's going to be a single family home, condominium, or a townhome. And with that, you get that $500 closing cost credit, and you might get an additional $500 if you meet the HUD guidelines, which we can discuss that at another time if you want to schedule with us. You also get an 0.8% discount off of the posted rate. So as I noted earlier, 620 credit score or higher, take a look, advertised rate. We don't put the first time home buyer rate on our website, but say if you see the rate hypothetically is 6.125 that day, you would get a rate of 6% being a first time home buyer with us. Next slide, please. So now with this, we're going to jump into, so we have a home ready program. This is through Fannie Mae that we partner with, and we do several of these transactions, to help people kind of purchase, as a first time home buyer. So again, eligibility: buyer has never owned a home or hasn't owned a home in 3 years. Same thing, as long as two borrowers, only one has to satisfy that requirement. Credit score 620. One of the key things to keep in mind to qualify for this program, you will need, so the income can go up to 80% of the area median income. So with that, that's going to be posted. If you, Terrence, you might have the link for that. I'm not sure. If you do, I can send it to you after. So that's going to be posted by Fannie Mae. So you can search it in the area that you're looking for. So, in the Boston area, just as an example, 106,000 would be around, that would roughly be that 80% area median income. As long as you're at that level or below, you can qualify for this program. You also need to complete Fannie Mae's Home View. It's kind of a educational program. You get a certificate at the end. It's very, very low stress. It's self-guided, but there are some wonderful, bits of information in there, kind of getting prepared, getting everything ready for your transaction, learning about all the different, more than we can do in this kind of, little seminar here, kind of just going deep into, the whole process, who's involved in what, and what to expect. So you can have a non-occupant borrower permitted. So if you want a co-borrower to add on there to kind of qualify it, welcome to do so. So the property requirements for that is, has to be a 1-unit principal residence, including condominiums, single families, or 2 to 4 unit principal residence would be your multifamilies. It has a higher down payment requirement, so you cannot do the 3% under this program for that. For a 2-unit, I can just tell you, you need 15% down, and then if you want to go 3 or 4 unit, you would need 25% down payment. Next slide, please. Perfect. So here are the benefits for this program and why you would want to, be considered as a first-time home buyer, that you would, you might want to take advantage of this. Get $1,000 off closing cost. That's huge. There's obviously some other fees besides the down payment there. You have legal fees to think of. There's a few other breakdowns, that that's going to be necessary for, closing on this mortgage. So that's a great benefit there, having $1,000 off. So PMI, so any mortgage that you apply for that has less than a 20% down payment. So going as low as 3% down, it's generally, that's all going to be weighted into that private mortgage insurance kind of ratio there. But with this program, you get a much more discounted, rate for you. So it's going to be, the monthly savings are going to be very beneficial to you. In addition, you also get an 0.8% off of the first time homebuyer rate from the credit union. So you get a grand total of 0.25% off of whatever that advertised rate is. If you take a look at our website, 40% off, whatever that rate is that day. You know, again, the cost savings on that, everything, every little thing helps here, you know, in this market. Again, stay positive, but you know, who doesn't like a good discount? And then one of the other things that I kind of just want to put the bug in everybody's ear here. So border income. Most loans, they don't allow for, you know, what's called border income. So I'll just kind of give you a, you know, just like a little anecdote from the past with me. I purchased my first condo through this program. And my girlfriend at the time, who's my wife now, was we were renting in Brighton, in, you know, in Boston. And what I was doing with this is I was paying the landlord the monthly rent. We were splitting it down the middle, but she would, you know, essentially pay it to me. So I could use that as qualifying income there. So which is, so if you have a, you know, if you have a spouse, a partner, or, you know, if you have you know, if you have a roommate that you're looking to purchase something with, this could be very beneficial for you to kind of increase your, you know, your qualified income to qualify. So, you know, but you'll just need to document it. So you'll need a copy of that lease, you know, showing what the monthly payment is. And then with that, you'll need to document that you've received, you know, either if you have checks, you know, from your, whoever the person is paying you, or if you use it, you can even use Venmo or Zelle. As long as you can print this out, we need to see 12 months of that to qualify it. So just, you know, kind of keep that in mind, because it's one of those things that's kind of overlooked and not really used. So you can use this to your benefit for sure. So as far as resources for low or no down payment, so currently at the credit union at this time, the minimum we can do is 3% down. We are, please just check back in with us in the future, because we are trying to partner with Mass Housing, who have some great down payment assistance loans. We're hoping to have that opportunity maybe, you know, in the coming months. We've been on their list for review, so please check back in with us. I don't really, you know, not too much I can talk about today on that, but, you know, they do have some great, you know, loans and assistance grants and things like that that we can use for your down payment to really assist you. And some other good resources here. One Mortgage through Mass Housing Partnership. If you take a look at that, and then FHA loans, you know, you have to be a specific lender for that one as well, but, you know, take a look at those. They have some great grants too from the government that can really help you there. Perfect. So this is kind of just the landing page. If you go to our service and products on the mortgage, you know, huecu.org, take a look. We kind of have everything just spelled out for you. You know, when you take a look here, you can check your rates. You can apply now. Sorry if you hear my baby screaming in the background, my apology. So we have fixed rate mortgages. We have adjustable rate mortgages. All these different great things. On the right-hand side over here, if you take a look, I just kind of want to talk about this briefly. So the biggest thing is when you're planning this is to kind of start the conversation, you know, check in with a loan officer. I would say reach out to one of us, schedule an appointment for a pre-qualification. Pre-qualification, we're not going to run your credit. We're not going to, you know, we're just going to be having a conversation with you. We're going to discuss, you know, we'll ask you all the questions. What are your monthly debts? What's your down payment? What are your goals? And then it's just a good way to kind of see, you know, based on the lending, you know, guidelines, here's what you qualify for at this time. Here's what you can do to kind of increase it, you know, if you want to, or to meet your goal, you know, just let us know and we'll work with you on it and kind of start that, you know, personalized service for you. And then if you want to turn that into an official pre-approval, no problem. All we need to do is kind of just, you know, do a little due diligence on our end. We'll run a credit check. We'll collect some, you know, some documents from you, you know, namely we're gonna get your pay stubs and, you know, assets, you know, whatever you're using for that. And then we can issue you that pre-approval. So with that pre-approval, you're good for 90 days. So you have that, you can start shopping around, you can start working with a realtor, you know, making offers on properties. You know that you are certified as a home buyer, you know, and you've been pre-qualified, you've been pre-approved at this price point, this level. So again, that is good for 90 days. Don't feel rushed though. You know, it is such a big transaction. If you don't find a property within 90 days, no problem. Just let us know. We can always reissue them for you. We just need to run a new credit check and we'll get I'll get a fresh one out to you for the next 90 days. Perfect. And then, so as I said, you know, I'm one of the 5 here. We're all my colleagues are great. They're much better than me. So, you know, but we all try to work our best and, you know, assist you. We got Michael, Sharon, Daisy, and Helen, you know, reach out to any one of us. We'd love to assist you. You know, we're all happy to help you meet your goals. So anytime you'd like to talk to one of us, please just let us know. We're more than happy to.
Okay. Thank you, Ryan. That's been amazing so far, very informative. It is now time for questions. So if anybody on the call or the webinar right now has any questions for Ryan and want to take advantage of the opportunity to speak directly to an in-house MLO, please use this time now. I will be monitoring the Q&A and we will continue throughout the presentation. Please feel free to submit anything that you want to know. Ryan is very friendly, very knowledgeable, and despite what he says, he is one of the best ones that we have.
Oh, stop it, you.
Let's see. If there are no questions for right now, we're going to keep moving on. We're towards the end of our presentation, but please do not take this as a note to not submit questions if you have them.
Well, honestly though, but if any, sorry to cut you off,
Mhm.
Terrence.
Yeah,
Guys, if anything does pop up, as you're kind of thinking about everything, just please schedule one of us, even if it's just a quick question, you can, or you can, even if it is just anything, you can always call our main line at the branch too. Terrence, can you put that in the chat, just the number, and you can ask to speak to one of us. You don't even have to schedule us. We'll give you a call right back.
sure, of course. Let me see. As I'm going through this, I'll put that phone number in the chat. And I did put in the chat a link to schedule with our mortgage loan officers. So if anybody's interested in that, please go ahead and do that. We are very friendly. And just to finish off a little bit more, if anybody is concerned about learning new ways to potentially either budget or get some financial counseling to prepare for that home buying process, please feel free to visit huecu.org/thrive. We have many different resources available to you to prepare you for that home buying process. We also have a Smart Rewards savings account that's now available. It's currently at 4% APY. That's decently high in the current rate environment right now, and we are offering that as a benefit to our membership for any new accounts coming in, and you still have access to it as a listing member and whatnot. We also have a survey. Please let us know how we did in this webinar. That's huecu.org/survey, and I'm going to end on this slide next coming up. Keep in touch with us, but that does not mean the presentation is over. Will be staying on for a little while longer. If you have any questions at all, please feel free to use this time now to ask them. And while Ryan is available, I'm going to be putting in the links in the chat.
Thanks, Terrence.
Of course. You know what, Ryan? I have a couple questions
Yeah, what
as
do
we're
you got for
waiting
me?
for questions coming in.
Okay.
About the Home Ready program.
Yeah.
Can I use that program more than once?
Yeah, as long, but you have to qualify as a first-time home buyer, so that's
I
the other
gotcha.
thing. So, yeah, so, I mean, if you say if you use it, now purchase a property, you have to wait kind of that 3-year mark again to be a first-time home buyer again.
Gotcha.
But yeah, so there's no limits. It's just you have to be a first-time home buyer, it's kind of that qualification there.
Let me see. I don't see any questions in the chat right now. If I'll keep it going for 2 more minutes. If there's nothing else, we'll go ahead and end it a little bit early, if that's okay with everybody. Let's see, what other questions could we possibly go with? How about you tell me about your condo purchase, Ryan? How did it go with that? With that a border income? Anything else? Anything else you want to share with that?
Honestly, it was a little nerve-wracking, but it worked out. So it was many years ago, but it was definitely great to take advantage of that. It was just something out of the blue. I got to be honest, Helen Lascaris was the one that helped me. I was not in the mortgage department at that time, but Helen was the one. She kind of figured that all out, and it was phenomenal. So it really kind of helped us. My girlfriend, wife, she's my wife now, but to get to our home ownership there. So
All right. It sounds like there
as
is
long as
hope
it's
out there.
documented, that's the biggest thing. It's just, copy of the lease. Like I said before, I believe I printed out all my Venmos and I was like highlighting them back, that's how it was. But, Venmo was pretty new, but I was like, oh God, I was like, but
Hey, you made it work, and I
yeah,
think that's a great message to communicate. Yes, it's unconventional, but it was a path to home ownership. It was your path to home ownership.
yeah, I know. And not one person's is the same. So it's just, the biggest thing is just formulating a plan. We're getting in touch with one of the MLOs, and, we'll lead you there. So it's just, just got to remain positive and, on track, and no problem.
Beautiful. All right, now it is 5:55. I don't see any questions coming in, so I'm going to go ahead and end the presentation. Thank you, everyone, for joining us today. Thank
Thank
you, Ryan, for spending time with us today and sharing your knowledge about the home buying process. I definitely feel a bit more invigorated and ready to buy. Um, Again, if anybody has any questions, please feel free to reach out. And if anybody's interested in scheduling an appointment with Ryan, I did post that link in the chat. Feel free to use it. Feel free to reach out to us, and we'll be happy to help you in your home buying journey.
Thank you so much. Thank you, everybody, for joining us. Terrence, as always, thank you.
Thank you.
Great. Have a good night, everyone. Thank you.